What's going on, you guys? My name is Zach Hartley and welcome back to another weekly watch list video. My goal with this series is to share with you the stocks that are at the top of my watch list, as well as how I feel about the market conditions going into the week ahead. Now, I'm sorry that I missed last week. I got a couple of big projects that I'm trying to finish off right now, including my latest course review. Spent $2,500 US on Umar Ashraf's day trading course, so I am going to be finishing up that project real soon. Make sure that you are subscribed to the channel to see when that comes out. And without any further ado, let's dive into this week's watch list. Okay, so let's just start with a broad look at the market. We're going to take a look at the NASDAQ, the S&P 500, and the Dow Jones just to see kind of how the overall market is doing. And when we look at the NASDAQ, we can see that it was a bit of a rough week last week. We definitely saw a pretty significant pullback. We approached some resistance right here at 14,500. This level acted as support previously in the past. Now it is acting as resistance, once right here in February and again right here just over the last kind of 2 weeks here. And so 14,500, critical level for us. I am also watching this kind of 12,500 to 13,000 level. This is another super important level. If we fall below this, that is going to be a very, very bad sign. But I do expect us to have at least a little bit of support in this area where people are going to just start buying these companies because there's so much of a discount. And I'm going to point out a couple of those companies to you real quick here. But first, let's move on to the S&P 500. And as you can see, sort of a similar pattern. We approached some previous levels of support and resistance right here, and it looks like we have been rejected over sort of the last week and a half to 2 weeks here. We have seen a bit of a pullback at almost the exact same levels where we saw a pullback in February here. So a very similar chart. And then in the Dow Jones, it wasn't quite as bad of a pullback. We're more so just trading sideways over the last 3 weeks. So slightly different chart here when we look at kind of the industrials and the banks. Now, when we look at Bitcoin, it's an interesting chart right now. I thought we were going to see a nice clean breakout here of 45,000. Turns out we just did not get that. We had a retest here at 45,000 and it held up for a few days, but we have now dropped below 45,000 and it looks like we could test the 40 to 41 range. We'll have to see what happens this week, but again, no clear direction at this very moment. Now, when it comes to earnings this week, we don't have a lot of companies reporting earnings, but we do have a lot of banks reporting earnings. We have JP Morgan Chase, we also have BlackRock, we have Wells Fargo, we have Goldman Sachs, we have Citibank, we have Morgan Stanley, and we have PNC, and we have Ally Bank. And so lots of different banks will be reporting next week. BlackRock is more of kind of an investment and a wealth manager, but there's a lot going on in the financial world next week, so it's going to be very interesting. And when it comes to market conditions that we need to be thinking about here, we have a couple of different things going on. So number one is inflation. That is a major concern for everybody, including the Fed. They released their FOMC meeting last week, which is basically the meeting minutes of their Fed meeting from, what was it, like 3 weeks ago now. And so it's very clear that we could be looking at a 0.5% rate hike, and that would have a fairly significant impact again on mortgages, so that's something to look at. We also have CPI coming out this week. That is consumer inflation, basically. It'll tell us what our inflation rate is at right now, so that's going to be really, really interesting. I do expect that it has probably increased again, so we'll have to see where that kind of comes in. And as of right now, we have significantly increasing and rising mortgage rates. So in January it was 3.2%, in April it is now 4.7%, and I'm seeing a lot of numbers as high as 5%, which is actually the highest kind of interest rates that we've seen in the last roughly 10 years. And so the market conditions, especially with regards to real estate and residential real estate, are changing pretty significantly right now. But what you do need to focus on is not necessarily the conditions, but the future trends. So this is what I'm looking at. And this is the kind of the industries and the sectors that I'm doing a lot of research on and spending my time. So number one is electric vehicles and batteries. Elon Musk and Tesla just had their Cyber Rodeo event last like 2 days ago, 3 days ago as I filmed this. It was a really, really cool event, and it just kind of made me think, like, the number of batteries that are going to be required to provide electricity for all these electric vehicles is absolutely mind-boggling. And so I don't think we have seen the end of the run-up in battery materials and these mining companies. I think there's still going to be a lot of room to run. I also think cybersecurity is going to increase dramatically over the next few years. We're going to talk about one company in that space. Quantum computing is another hot topic right now that I'm super interested in, but all of these stocks have been down over the last 2 to 3 months, so there's nothing I can really point out to you here. I did videos on all of the quantum computing stocks that I'm really interested in. So if you want to see them on my channel, you can definitely check them out, but nothing has happened with these stocks recently. Online learning, I really like Coursera and Udemy, but again, both of those stocks are down right now, so I'm not doing much with them. And renewable energy, I think over the long term, is probably going to do pretty well. So I'm looking to try and find a good renewable energy company where all they do is produce the energy and pay out dividends to shareholders. So that's what I'm looking for. I'll keep you updated when I find it. All right, so let's dive into the stocks for this week. And number one is Fortinet. This is the cybersecurity company that I really, really like. And I'm going to show you the financials here in just 1 second. But I'm pointing this one out because I'm watching this $350 level. It acted as resistance right here. We had a little bit of a fake out in December of last year, and then since then we've got rejected at 350 twice, once right here in March and again right here at the beginning of April. And so I'm watching Fortinet real closely for a good, solid, strong breakout of 350 and then hopefully 370. That's what I'm looking for, and the reason I like Fortinet is because these financials and this revenue growth is phenomenal. If you look at the company back to 2012, they have increased their revenue every single year to the point where they are now at 3.3 billion compared to 530 million. So they're doing extremely well. The gross profit margin is excellent in my mind. I think it's really, really good. I like everything about the company, and I think they're doing a pretty good job here, especially from the financial side of things. And I think cybersecurity is only going to grow over the next like 5 to 10 years. So that is probably my top 3 cybersecurity stocks is Fortinet, but this is probably the one that shows the cleanest trade right now on the break of 350. Now, next stock that I really like here is Advanced Micro Devices. This is one of those really good companies that I think is selling at a discount right now. As you can see, they're down from 164 down to 101 right now, and we have some major support here at $100. You can see we bounced off it in October, we bounced off it in January, we bounced off it at the beginning of March, and we are now testing it again here at the beginning of April. If we see a bounce off of 100, that's going to be a very strong entry. If we see the breakdown of 100, I think it's going to fall to 90 pretty quickly, but I think that only happens if we see a major sell-off in tech. So if everything just crashes Monday, Tuesday, Wednesday, I think the short trade on AMD from 100 to 90, probably a pretty safe bet, but I do like the company long term, and I think this is one of those good companies that's selling at a discount. I would only go short on this for like maybe 2 or 3 days. I wouldn't be holding a short position long term. Next company I want to point out here is E3 Metals. Really interesting Canadian company, actually based out of Calgary here where I live. We got rejected at 250 right here. We found a little bit of resistance. We broke through and then got rejected at 250 again. We got rejected at 250 in March here, and now we are breaking through with some decent volume here and some really strong candles. So this is really nice to see. I think lithium and all of the materials that go into manufacturing batteries, particularly for electric vehicles, I think if you can supply that market, I think you're going to do extremely well over the next 5 to 10 years. And already we are seeing a dramatic price increase in all of those raw materials. And so I think it could be I think that could be a barrier to electric vehicles over the next 10 to 20 years, is how are all these companies going to make these battery packs and these vehicles if the batteries begin to cost more and more and more? It would make gasoline cars more attractive. And so we're going to have a very interesting dynamic unfold here over the next kind of 5 to 10 years when it comes to battery supply. Next company I want to point out to you here is Power Corp of Canada, ticker symbol POW. I like this company because they have a healthy dividend at 5.1%. They have great financials. They have an awesome balance sheet. It's a good company with great long-term growth. And they also own 70% of Wealthsimple, which is probably the quickest and the fastest growing fintech company here in Canada. I think it's a solid stock. It's a solid company, and over the long term, I think this company is going to do extremely well. And they seem to know how to invest. Buying into Wealthsimple and owning 70% of it, I think they made the right decision there. And the last company that I want to talk about today is LuLuLemon. LuLuLemon, super interesting here. We can see very clear support right here around $280. We can see very clear resistance right here around 380. We got rejected. We broke through, and then 380 acted as support twice, 3 times right here. Then we fell through 380, and now it is acting as resistance. And so 280 and 380 are the very crucial levels on LuLuLemon. If we fall down, I would short sell it down to the 300 to 280 range. And if we break through 380 with good volume and strong candles, that'd be a great buying opportunity as well. Both of those on the shorter term trade ideas. I like LuLuLemon long term though. If you're looking for that kind of consumer type stock, LuLuLemon's a great buy. Now, here's my summary for the week and for this video. I do think that there are some great long-term stocks that are going on sale right now. If big tech, if Apple and Google and Microsoft and Amazon sell off anymore, I think you should probably pick up some shares of those. I will be for sure. And I think there's a couple of other great stocks that are on sale right now, one of them being AMD. We have also seen a major rotation out of growth stocks. If you have noticed, growth stocks, technology stocks, software stocks, they're all down pretty big. And that's because the money has changed. It has rotated into energy, into utilities, into healthcare, and into consumer staples. And so if you look at any of the indices that track those specific industries, they're all near all-time highs because the money has rotated out of the risky stocks, the risky growth tech stocks, and into the safer kind of stocks that we know that are going to be there, that are going to have consistent revenue, and that everybody has to buy no matter what. And so that is a very clear rotation, and if you look at any of those, you can see it. Maybe I'll just make a video on that topic, but it's very, very interesting. And the last point I want to make to you is you need to look for these things because understanding the broad market will help you choose individual stocks. Like, yeah, you can buy and sell technology stocks all day long, but if you can understand that tech is selling off and utilities are skyrocketing right now, you might have an opportunity to make more money. And so I think it's really important for you to have a baseline understanding of economics and then understand what is happening in the market as a whole and the different industries within that market, because it can help you kind of narrow down your choices and choose individual stocks that are, one, great companies, but two, in industries that are growing. And if you can do that, you're going to outperform the average investor. Now, if you're interested in learning more about that, I have a full course on it. It is hosted on Skillshare. You get a couple of weeks free when you sign up with the link in the description down below, and it is completely free. It's like the best thing you'll ever find. It's not going to cost you a single thing unless you want to keep the subscription after the trial, and there is 10 hours of content that will walk you through everything you need to know to get started investing in the stock market the right way. There's over 11,000 students, 380 reviews, and over 1.6 million minutes of watch time on the course. So I'd love to share it with you. It's hosted on Skillshare. Link is down below, and I promise you it'll be the best free resource that you can find online. Now, if you get any value out of this video, remember to click that like and subscribe button. I'm trying my absolute best to finish up this review video, and hopefully it'll be out soon. But click that like and subscribe button, and we'll see you guys next week. Talk to you later.